Welcome everyone, and thank you for joining us today. Before going into our second quarter results for 2024, I'd like to update you on our Capital Markets Day progress, which together with our recent Energy Transition Strategy update, shows how we intend to generate more value with less emissions. If I take you back to June of last year, we committed to our guiding principles of performance, discipline, and simplification. The aim was to drive a culture shift in our organization, and we are seeing the results play out. We set 4 financial targets, and we're making solid progress against each and every single one of them. We also talked about the importance of establishing a track record of delivery, and today I hope you can see this track record developing and gathering momentum. In short, we're turning our words into actions. Now let me give you some examples. In our integrated gas business, we said we would continue to grow our LNG portfolio by increasing both our liquefaction and access to third-party volumes, and that is what we have done. We've extended existing valued partnerships like in Oman and entered into new ones, such as the ADNOC Ruwais LNG project in Abu Dhabi. We've also invested in backfills such as in Manatee in Trinidad and Tobago, and we've agreed to acquire Pavilion Energy in Singapore to increase our portfolio length. At the same time, we're working hard to achieve first production from our large LNG joint venture project in Canada by middle of next year. These investments add significant volumes and flexibility to our leading global LNG portfolio. We also saw operational performance improve across our integrated gas business. Prelude, for example, significantly increased its controllable availability since its turnaround last year, while Pearl GTL in Qatar continues to build on its impressive track record. Moving to upstream, where we want to ensure cash flow longevity, we said that by 2025 we would bring projects online with a total peak production of more than 500,000 barrels of oil equivalent a day, and we are making good progress. We have successfully started up several projects like Vito and Rydberg in the Gulf of Mexico, Mero 2 in Brazil, Block 10 in Oman, and Timi and Jerun in Malaysia. And around the end of this year, we expect to see the startup of Wael in the Gulf of Mexico, along with Brazil's Mero 3 and Penguins in the North Sea. Looking further ahead, we have taken final investment decisions on Atapu 2 in Brazil and Sparta in the Gulf of Mexico. These investments, along with others in the funnel, will help us maintain our liquids production at roughly 1.4 million barrels a day until the end of the decade, as we communicated at Capital Markets Day, allowing us to continue to provide the energy security that the world needs. And just like in our integrated gas business, upstream has also improved its operational performance, both in deep water and conventional oil and gas. Now let's take a look at downstream and renewables and energy solutions, where we said we would high-grade the portfolio to support a profitable energy transition. In chemicals and products, we have agreed to sell our energy and chemicals park in Singapore and our shareholding in the PCK refinery in Germany. In mobility, with a focus on value, we continue to high-grade our network and drive premium fuel growth, which is reflected in the improved V-Power margins. Lubricants also saw higher margins and improved performance, helping marketing-adjusted earnings to grow. We said that this management team is prepared to take some tough decisions, and with the backdrop of disappointing market conditions, we paused on-site construction at our biofuels plant in Rotterdam, where we will now seek to address project delivery and ensure future competitiveness. We've also said that we will focus on areas where we have a competitive advantage. That's why in renewables and energy solutions, we exited the home energy business in Europe last year and continue to employ a disciplined and selective approach to power. But we are growing our downstream renewables and energy solutions portfolio where we see attractive returns, demonstrated by our final investment decision on Polaris CCS in Canada. We are staying true to what we said at Capital Markets Day. We are maintaining capital discipline, improving operational performance across the board, and we are becoming more predictable, delivering on our targets. Take the structural OPEX reduction target, where we have already delivered $1.7 billion out of the $2 to $3 billion that we committed to deliver by the end of 2025. I'm proud of the efforts of our staff across every part of the organization and the progress that we are making. Our strong overall performance has given us the ability to continue to deliver enhanced shareholder returns. As a result, this quarter, we have again been able to exceed our distributions range of 30 to 40% of CFFO through the cycle. Now let me tell you about our financial results in the quarter. We had a strong quarter, driven by good operational performance. Our adjusted earnings were $6.3 billion, and we generated $13.5 billion of cash flow from operations. In integrated gas, once again, we achieved high controllable availability from QGC in Australia, an asset that has been performing exceptionally well. In our chemicals business, Shell Polymers Monaca had significantly higher utilization, with all 3 polyethylene trains now fully operational. And in the products business, we also had strong operational performance and delivered another set of robust trading and optimization results. Before moving on to our financial framework, I'd like to come back to the structural OPEX reduction that I mentioned earlier. In the first half of this year, we've delivered an additional $700 million reduction, on top of the $1 billion reduction from last year. The majority of the contributions this year have been realized through performance initiatives across the organization, such as focusing on operational excellence and lowering overheads. The remainder was achieved through portfolio choices, and this does not yet include the impact of announced divestments like Singapore. We will continue to take cost out as we progress towards achieving the target that we have set at Capital Markets Day. Now, moving on to our financial framework. Our cash CapEx outlook for the full year of 2024 remains unchanged. We continue to invest only in those projects that exceed our hurdle rates and meet our strategic intent. Our balance sheet remains strong, and today we have announced yet another $3.5 billion share buyback program, which we expect to complete in time for our Q3 results in October. This makes it the 11th consecutive quarter in which we have announced $3 billion or more in buybacks, showing that the strong performance of the business results in compelling returns to our shareholders. To summarize, with us now a little over a year since Capital Markets Day, I'm incredibly proud of the progress that we are making against all of our financial targets, the focus that we are bringing to our investments, and the improvements across the company. Today, we announced another strong set of results, making the first half of this year one of our best. And with so much untapped potential and so much more to achieve, we will continue to move forward, take bold steps, and build a track record of delivery. Guided by our principles of performance, discipline, and simplification, we aim to be the investment case through the energy transition, delivering more value with less emissions. Thank you.